Hey, welcome back to Living in Minnesota. It's time for your Twin Cities real estate market update. My name is Joe Carmack. I am your resource for all things real estate in the Twin Cities. And before we get into the data, we got to talk about what happened this past weekend. So it was a very active weekend. I had 3 different buyers that were going out, and here's kind of the story. First buyer had multiple properties that they liked. We did make an offer on 2 different properties. It's really interesting with those guys. They had one property they were looking at had 17 offers on the property. Another one that they made an offer on had 7. Didn't get that offer accepted. We were able to find another property through some networking that I got our hands on, and there's only 2 offers on that one, and they got their offer accepted. So that was very exciting for those guys. Second buyer, just starting out, maybe not quite as serious, but the property that he made an offer on, there were 4 offers on that one, didn't get accepted. And then the third buyer out is kind of just not super serious, but they're casually getting going. So they didn't find anything to make an offer on, but overall, multiple offers on pretty much every property, and it was a really aggressive weekend. I was actually a little bit surprised. So I'm recording this the second week in March, and so I didn't think we'd be this aggressive this fast. My initial hot take, which I'm gonna quantify for you with the numbers later, it does not seem like the market really cares about interest rates, which I know is counterintuitive, and a lot of people roasting me in the comments on here saying, you know, nobody can buy a house because of interest rates. My experience in this day-to-day, multiple clients every week, I don't think people particularly care. But let's show you exactly what the numbers are doing. And we'll start you off with interest rates. So taking a look at rates for today, this is as of the 8th, we're at 6 3/4. Now you can kind of see where things have been. We were up above 7%. And right now I usually see us trending around that 7%. Now this data is about a week old. So I think we're right around 7%. Right now, what are we seeing with the numbers on this? People are either really stressed out about rates and they're not doing anything, or they're the type they're like, you know what, I'm sick of waiting around and I just want to buy a house. There's this really cheesy catchphrase that I've been hearing kind of in realtor circles, and it's that you can marry the house, but you're dating the rate, right? You're married to the house that you pick, so pick a good house, but ultimately you're still dating the rate. So I think a lot of people's mindset is kind of like that, in that they are willing to get into a property now at a rate that they don't love, but they can afford the payments, and then they'll just plan to refinance in 1, 2, 3 years down the road. Let's take you into the month's supply of inventory. Now, I'm gonna show you most of these graphs. If you're new to the channel, I really like this style of where I show you what's happening on a rolling basis, averaged over 12 months, and then what's also happening just on a month-to-month change. So let's start you with this one here. In case you are new to the show, 6% or 6 months, excuse me. That red line is kind of a balanced market. The lower we are, the more of a seller's market we're in, the higher, more of a buyer's market we would be in. So currently in the Twin Cities, we're still very much a seller's market. If you look there, February, we're at 1.3 months supply. Again, basically just the lower that number goes, the more competitive it's going to be, the more skewed towards seller favored it will be. That's down 0.1 months since January. And if you're following me closely, you're going to notice that number doesn't line up with what we showed last month. I don't have any idea why this is the case, full disclaimer, but they seem to update the data. So I think last month we reported January was 1.5. It's now showing 1.4. So in any case, don't shoot the messenger. We are down a touch for February. Now, with that number, we see it typically about half the time that number does go down in February before we start to see it rising through the summer months. So I'm not terribly surprised. That's about right, I suppose, for where the market's at and where it's trending. I would not have been surprised to see that number start to go up, because overall we need that number to start trending up with inflation and rates and everything that's going on. We're going to be seeing that coming up, but we apparently did not see that so far in February. Let's switch it to the rolling 12-month average there. Rolling actually stayed the exact same, so you can see 0%, 0 point change, and then that rolling average 1.6 months supply. So this is again where we are seeing things starting to trend up. We like that. We want to keep seeing that. We do like that our averages are moving the right direction. But this is not the same as anything crashing. You know, I think some people are listening too much to like social media and the news that's so dramatized and just clickbait, right? I'm just giving you the data. You know, people are acting like this is happening in the market. It's not. We are starting to shift in the right direction, but we're still in some of the strongest sellers market that we've seen in forever. So we like this number. I want to see this going. If prices wanted to shift, that'd be cool with me, but they're not so far. So here's what prices are doing right now February 365 was our median sales price. That's a $0 change also from last month. So prices didn't change from month to month with that rolling 12-month average number. Now, if we're looking at our rolling 12-month average, you're gonna see this one did go up 7.4% from February of last year. So that change from February to February is up. This number was, I believe, about 7.3 last month. So slightly higher, which is not really surprising. I would love to see this number coming down. It's just simply not so far. But this is a great example. Let me show you the month-to-month changes in prices. Now, this one is pretty fascinating, and I'm also going to zoom in a second for you on this one. So if you look just from January to February, our sale prices went down $2,000. So not terribly significant, also not uncommon for a January to February number. As you can see here, with all of these numbers, if I kind of do it like this, those valleys are all for the winter months. We're very seasonal in the Twin Cities. So if you're somebody that's relocating from the rest of the country, this might be foreign to you. Those peaks are all going to be during the summer months. It's kind of common sense, but because it gets so cold and winter and everybody else, things slow down in the winter, demand falls, listings are on the market, so then that's going to affect prices. So really, this is not anything terribly surprising that numbers went down. But let me do you one more and let's zoom in. And this is just looking at the last 3 years. And this is our specific month-to-month number. This is not the rolling average number. So here's what was very fascinating. This February and last February, exact same dollar amount. So prices didn't change at all, smack dab at $340,000. That is pretty surprising to me. Because we look from from last February, for example, I believe the previous February was like this data point. So normally we're going up a whole lot more. This February, we're actually exact flat from last year. So that's really surprising to me. A couple of takeaways from that. The main reason, and I think you can see it here, let me clear up my screen again for you. There's normally a little bit more of a gentle bell curve to things. You can see last year we went whoop and then slammed right back down. So from January through June of last year, we were up about 14%, I think 14.1 from that low valley to the peak, which is fairly normal. That wasn't really unexpected. However, it was pretty surprising how quickly we came down the mountain. And then we dropped, I think, about 11.5% from the peak to where we ended for December, January timeframe. Do we like this? Yes or no? What does that mean? I think, first of all, it's pretty safe to say, basically every single year in March is when prices start to go up. Sometimes it also starts to go up in February. We obviously just saw a little bit dip down for our February numbers here. So I do kind of anticipate that this number starts to trend upwards, as we always do with following this trend. So I do think we'll see our prices go up. The thing that's anybody's guess really is going to be how much our prices are going to go up. And we really don't have a solid answer for that. Nobody's got a crystal ball. They're going to keep ratcheting up rates until they can get inflation under control. And people don't want to see prices falling. They also don't want things to be so competitive. And, on one hand, people are like, well, prices falling is a bad thing, so we should wait. But then people are also saying, well, with prices where they're at, we can't afford to buy because wages aren't going up as well. Well, you can't have both. So if prices come down, which I don't think is going to happen, there's no data I'm hearing that says that it will. In the Twin Cities, it probably will nationally, it definitely will in certain other markets, but locally, I don't see that happening at all with our numbers. This is still surprising, asterisk, but in addition to that statement, the fact that we're only at 0% change for 1 year, year over year, that is actually pretty surprising to me. Could suggest more so that we're going to have less growth over the next 12 months. I would bet you a steak dinner that we're not going down. Despite people, being concerned with prices, our days on market is something that I keep my eye on. This is going to tell us again how competitive homes are. This is somewhat the relationship between how many buyers and sellers there are, which again is going to be that big, the big negative that I've got coming up for you in a second that we need to talk about. But overall, we're still sitting at 14 days on market. That was the same as the month before. If we switch into the rolling month-to-month average, the previous one was the rolling average. This is just the direct month-to-month. We did go up just a tiny bit, as you can see there, but I'm not terribly concerned about that. And we do expect our numbers to be going up anyhow. You got to remember, we had kind of a strange number of years with COVID and then the post-pandemic kind of cycle of things. We're at February here. This is not some huge spike. If the market was crashing, wouldn't we see that number going up like crazy? If homes weren't selling, if no one was able to buy, we would be seeing that number going up a whole lot more quickly than we actually are. So With that number peaking, we would have been in this sort of a trend line right here. And so as things speed up, we go into the hotter months, that number will come back down. So overall, I'm not terribly surprised. If your mindset is in this, you're going to be shocked that things are going so slow, but it's actually getting back towards being a normal market, which is welcomed by essentially everyone. Here's something that really caught my eye and was pretty shocking. Before your eyes glaze over and you're like trying to make sense of this, let me just point out what you're looking at. This is the number of new listings that came on the market. This is the change from January to February. You can see there was essentially no or very little change from January to February this year. What we should have seen, or what I would have liked to have seen, would have been if that number went something more like this. It didn't. It only went like so. So that's not a great number at all. Now, two things for the market to quantify crashing or having some major shift, right? Which is the buzzword in everybody's brain. We would have had to have seen, number one, buyer demand fall completely. And so then we would swing the dynamic towards being more buyer favored because there's more listings and there's not a lot of competition. Okay. So that would be the number one, buyer demand dropping. Number two, for a crash or for a major shift would be, we would have to see the number of listings spike. Now, either one or some combination of the two of those things can happen. And that would indicate that our market is shifting or that it's about to shift. Number one would be that listings going up. We didn't see that at all. I mean, if you can see here, like if this was all of a sudden spiking and there was a ton of homes available, no one buying them, that would be a problem. However, with this past weekend, and why I mentioned that again, is we're seeing that there's a ton of demand, and we can just look at the number of showings that I had, the number of buyers that we saw at showings during, our showings that were overlapping, the number of offers that were happening on properties, the number of them that sold. The demand is absolutely there, and the listings aren't there. So in relation to the market crashing, right? No demand and tons of listings. We've got the opposite. You can see here, there's no listings and there's a ton of demand. That's kind of why I said earlier, which I'm sure didn't, some people got upset, I'm sure, but people just don't seem to care about interest rates that much. And I'm not sure if that's good or bad. It's up to you and what you can afford, but the demand was there. It is there, and we're definitely seeing the market taking off. And if we don't see this number of new listings going up, that would actually put us more towards the market that we have been in the past couple of years. I don't think we're going there. I think that the market actually took there was a little bit of a delay. If we went back to that original screen that I showed you with the interest rates, because rates kind of spiked towards the first of the year and they were high, I think people were waiting, like, all right, maybe we'll see if rates slow down. Then when they didn't, people just got out anyways. And that's what we're seeing really March 1st and moving forward. So that's what's going on in the Twin Cities real estate market. Again, my name is Joe Carmack. You can find all my information in the description down below. If you have any questions, make sure to drop them there for me. Like and subscribe, and I will see you next time.